Assistant Secretary of the Treasury Department for Economic Policy under George W. Bush. He is the recipient of the Treasury Medal. He earned his BS from University of Illinois and a master's and PhD in economics from Harvard University. Richard Clarida, welcome to Bloomberg.
Well, great to be on your show, Barry. I'm a big fan, so it's a treat to be in the studio.
Well, it's a treat to have you. You and I know each other for a while. I've been a fan of your work for quite a bit. I know of you from your work in the Treasury Department. Let's begin talking about your tenure as Assistant Secretary to the Treasury for Economic Policy. You were there really as the dot-com bust was accelerating, as the recession was starting. What was that like during that period?
Well, you know, Barry, it was a very eventful time. In fact, interestingly enough, my first day on the job at Treasury was September 11th, 2001. So we all know where we were, but I was just checking out my office. And you may know Peter Fisher. I was in Peter Fisher's office when the second tower got hit, and then we were evacuated at Treasury. I actually saw people streaming out of the White House, and someone said the Pentagon's been hit, so we're next. So it was actually quite scary on day.
I can imagine. Sure.
But it was an eventful time economically. The dot-com, of course, we did have the bursting of the dot-com bubble. When I arrived in September, Barry, of 2001, the data was sort of close to indicating a recession on September 10th. The MBER hadn't called it yet. Certainly the day after, we thought we were going into a recession. So in retrospect, given everything that's happened since then, it may seem like a pretty tame and quiet period, but it's pretty eventful. The dot-com bubble, we had the Enron WorldCom accounting scandals, and obviously the financial system seizing up for a while. So yeah, it was a very eventful time.
That's some first day. You mentioned it was nothing like the financial crisis. I believe, if memory serves correctly, that recession began around March of that year, and by the time 9/11 came around, it was almost over. I think we dated it November. Is that about right?
But that's, of course, with the benefit of hindsight. At the time, the MBER hadn't gotten around to that. But you're right. Now we know it started in March and ended in November.
And you were an economist and researcher for NBER. I left that out of your CV. What did you do for them?
Well, NBER is an incredible organization that I think dates back to the 20s. It's essentially an independent organization for doing applied economic research, really pioneering work in business cycle analysis. I was fortunate enough to do my graduate work at Harvard in the late 70s and early 1980s, right about the time that Marty Feldstein moved the MBER from New York to Cambridge. And so it's really an incredible organization. I started as a faculty research fellow and then now as a research associate, and essentially part of a group that publishes applied research, in my case, in international macroeconomics.
For people who may not realize, that's the organization that officially dates the starts and ends of U.S. recessions.
Exactly. The Business Cycle Dating Committee.
And by the way, for people who have never been on the website, there's an enormous amount of research, of data. It's really a tremendous resource for people who play in those fields.
Absolutely.
Since 9/11, the immediate response, or I think it was a week or so after that, then Fed Chairman Alan Greenspan cut rates. He took them, started a rate-cutting period where we were under 2% for 2 or 3 years and then at 1% for a full year. What was the impact of those ultra-low rates?
The time there was concern of a deflation scare. The economy was recovering, but the recovery in 2002 was pretty feeble, and so as a result, there was also a lot of changes impacting the financial system as well. And so we did go through a period of very low rates. I think in that cycle, the Fed cut the funds rate to 1% in June of 2003 and kept it there for a year. Obviously, since that period of time, I must say at the time I was at Treasury and I would have weekly meetings at the Fed as part of that job, I was aware of that policy and was not a critic of it at the time, it did seem to be an appropriate policy. I think since that point, some critics of the Fed have pointed out that the Fed was very slow to begin raising rates in 04 and 05 and 06. And of course, we also had a housing bubble at the time. And so I guess one can try to make a connection between that policy and the housing bubble. And that may have been a factor, but I think there are a lot of other factors at work as well.
Well,
yeah.
Let's discuss that.
Yeah.
That's an interesting issue. I mean, clearly, anything priced in dollars or credit had a big move upwards. So whether it was commodities, gold, or mortgages, what other factors did you think were significant then?
I think the other thing is we had what appeared to be, and what many, including myself, thought was a innovation in finance securitization, and the fact that in mortgages, as in other parts of the credit market, credits were being securitized and they were no longer on the balance sheets of banks. And the Fed and others thought that made the financial system safer. And in theory, maybe it did, but obviously, in retrospect, there were some excesses in securitization and in derivatives. And I think the system was more fragile than a lot of folks thought at the time. And certainly, and I think that was a big part of it.
There was a lot of, hey, the sausage is only as good as the meat you put into it. And we know there was a lot of bad, subprime mortgages that had gone in.
Exactly.
Clearly a factor. Coming up, we continue our conversation with Richard Clarida of PIMCO and Columbia University, discussing monetary policy and inflation.
You're listening to Masters in Business with Barry Ritholtz on Bloomberg Radio.
When I grow up, I want to be a new pair of blue jeans.
When I grow up, I want to be a kid's first computer.
When I grow up, I don't want to be a piece of garbage. And if you recycle me, I won't be.
Give your garbage another life. Recycle. Learn how at iwanttoberecycled.org. Brought to you by Keep America Beautiful and the Ad Council.
You know where you want to be. Red Hat has the broad portfolio of open source technologies to get you there. Meet your evolving business challenges head-on with secure solutions for the enterprise, including hybrid cloud, management, DevOps, containers, application development and integration, and more. Visit redhat.com/opentech to learn more. Red Hat, the open technology to help you realize your vision.
Burden LLP Accountants and Advisors celebrates 100 years by looking back at memorable moments in New York history. On June 28, 1970, a year after the Stonewall riots sparked the LGBT civil rights movement, New Yorkers assembled at Christopher Street to march in the first LGBT Pride Parade, inspiring communities across the nation to do the same. Since 1917, Burden has also been inspiring others to confront challenges and move forward. Visit burdenllp.com to let Burden help you achieve your own great moment in New York history.
This is a Bloomberg Green Business Report. Tesla has electric cars and now a solar roof. Just as with the cars, the first customers for the installations are Tesla employees. By selling to them first, Tesla says it hopes to work out any kinks in the sales and the installation process before offering it to a wider public audience. But it is taking $1,000 deposits at its online store for these smooth, black, and textured glass roof tiles that are virtually indistinguishable from high-end roofing. From most viewing angles, the shingles look like standard materials, but they allow light to pass through onto a solar cell embedded beneath a tempered surface. Production of the tiles is being done at Tesla's Fremont solar plant in California, but will shift later this year to its new factory in Buffalo, New York, with additional investments from Tesla's partner Panasonic. As production ramps up, sales will begin in the UK, Australia, and elsewhere, and there are expected to be sculpted terracotta and slate versions of the solar roof. And that's a Bloomberg Green Business Report. I'm Patrice Sikora.
Good morning.
Are you looking to enhance your own trading or investing experience with investment or other third-party services? Or perhaps you offer an investment or third-party service that you'd like to expand to investors worldwide. Do both at Interactive Brokers Investors Marketplace, an online service where traders, investors, and institutions can meet and do business together. Enhance your trading experience or expand your business. Visit the marketplace at ibkr.com/services.
Kevin Gallagher is a graduate of NJIT, New Jersey Institute of Technology. He rose to become president of a global specialty chemicals company generating $500 million a year. Before retiring, he put sustainability at the center of the company's far-seeing business strategy.
The whole issue of sustainability is an important one for institutions like NJIT because in many ways it represents one of the next technological frontiers. We've developed so much in the 20th century and into the 21st century in terms of innovation and technology. It's really only been in the last 20 or 30 years that we've begun to worry about, well, how do those technological solutions continue through multiple generations where we use up resources less quickly? NJIT graduates are both sensitive to and interested in